Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was June 2025. That's right, it's now July and we are halfway through the year. It's crazy. For those of you new to the channel, we are a national buyer's agency with offices in Sydney, Melbourne, Brisbane, Adelaide and Perth. We believe that there's always an opportunity somewhere turning dreams into addresses, and we help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity. We've been operating through 3 decades, and our experience will ensure no sleepless nights worrying about property markets. And on this channel, we talk about all things property, but most importantly, I read the news and separate the facts from the fiction so you don't have to. Let's get straight into the data. Okay, on a light side real quick, I thought I'd show, in April I did a video when I spoke about the most recent purchase, the largest purchase in Australian history for a residential property, and it only happened in April this year, and it was in Toorak, Melbourne, and it was a property that was over $130 million, and that claimed the spot of the most expensive house ever to sell on record. Now, that was really impressive, but I can tell you that that has now been overtaken by the most expensive residential purchase in recent history. And that is, it didn't come from a standalone house or some mansion in Point Piper. It was a luxury super unit in Barangaroo. Okay? Barangaroo. And now this sold for $141,550,000. Okay. Now, just to let you understand, the stamp duty on this would have been $9.8 million. So just shy of 10 mil just on the stamp duty. And that's where it is. It's the top 3 floors of this building. It has been revealed that a 37-year-old, yep, get depressed everyone, a 37-year-old Chinese millionaire has purchased the top 3 floors known as Unit 88. So it's just one big unit, those 3 floors all together, 88 of 88 Barangaroo Avenue in Sydney. Insane, okay? But very interesting. Okay, let's have a look at the numbers now for the Hedonic Home Value Index. Monthly gains were recorded across almost every broad region of Australia, with Hobart at minus 0.2% being the only capital city or rest of state regions to see a month-on-month fall. If we have a quick look now, we can see that actually, if you look at it from a monthly perspective, Darwin is the best performer, up 1.5%. And you could be confused by this because then you'd look at the total return and say, Jay, in total return it says 13%. And that's actually the best performer there. Second place would be Adelaide at 12. And then third place would be Perth at 11.6. Maybe I should buy in Adelaide. Now, with the highest rental yields in Australia, Darwin has the highest total return in Australia. And the rental yield almost matches its capital growth, okay? Because the total return column that you can see in front of you, that's capital growth plus rental yield combined, and that gives you that number. So the rental yield almost matches its capital growth. But does it mean that it's time now to buy in Darwin? No. And let's not forget one key principle of property: supply and demand. And before I go into that, I just want to make sure you remember that our best performers that we can see there over the past year, so over the past 52 weeks, are currently Adelaide at 8% capital growth plus rental yield, which equals that total return column next to it. And then Perth and Brisbane are now tied at 7%. So as I said, let's get back to Darwin. Let's not forget the one key principle of property, that is supply and demand. And nothing affects supply and demand more than population. So data from demographersID.com.au shows that Australia is set to add 8.6 million new people from 2021 to 2046. Now, this data will be updated within the next few months, okay? But Australia's population has doubled since the early 70s. At the last census in 2021, Australia's population was just over 25.5 million people. Now, their 2024 forecast shows Australia reaching 34.6 million people by 2046, an additional 8.9 million people. But Last year was one of the largest international migration numbers on record that we saw in our country. So I would very much expect that they are going to renew their numbers as of July 1st this year. And the new data should probably come out in September. And I'm expecting to see that much higher than what it currently is now. This chart shows Australia's forecast population growth by state and territory. So people ask me, well, where is everybody heading? Well, 2/3 of Australia's total forecast growth is expected to occur in the country's 4 largest states, specifically the 4 biggest capital cities, with the lion's share concentrated within the greater capital cities of Melbourne, Sydney, Brisbane, Perth. Adelaide is 5th place. So we can see here, if we look at the numbers, 29% increase in population for Sydney. So that is 2.4 million more people. A 41% increase in Melbourne, and this is one of the real big kickers why we're very aggressive on Melbourne at the moment, 2.7 million. 40% increase in Queensland, Brisbane, which is quite significant, 2 million additional people. 44% increase in Perth. This is another reason why we can't see the Perth market crashing. Okay, yes, it's had some really good performance, but that does not mean it's crashing. They're going to have a 44% increase on their population. That's quite significant. Okay, and that's going to be over the next 2 decades. And then the last one I want to look at is going to be Adelaide. That's up 22% over the next few decades as well. Now, Darwin is actually last place. Okay, the Northern Territory is last place. So this is why I'm saying, even though those numbers on the previous slide might make it look attractive, once you look at a more long-term trajectory of the market, you can see really it doesn't make sense to be buying in a place like Darwin at the moment. All right, now let's jump into the speed check for this month. All right, we're having a look here in alphabetical order. We can see Adelaide, median dwelling value, and I got a tip from somebody asking me to add the median dwelling values, and I listened to feedback. Median dwelling values, $837,167 in Adelaide, up $67,000 for the last 52 weeks, which is the equivalent of $1,300 per week. Brisbane, $926,243, up $65,000 for the year, or $1,250 per week. Melbourne still going up. Melbourne's had this reversal now, people, and if you watch my videos back maybe 6 months, you'll see Melbourne down over $1,000 per week, and now she's only down $60 per week. Median dwelling value, still the lowest out of the major capitals, at $796,952, currently down $3,200 per week, and now only $60 a week in the negative. So Melbourne is taking a turn. Perth, $819,885, $57,000 up over the last 52 weeks in the year, or about $1,100 per week. Finally, Sydney also just had a turn. The past 6 or 7 months that I've been doing this, Sydney's been in the negative, but it's just had a reversal. Let's see if it happens again next month. But that median dwelling value is at $1.210 million, currently up $16,000 for the past 52 weeks, or $300 per week. Looking at the median dwelling rental yields, we can see here the average is still about 3.5% for the combined capitals. And then we've got Sydney, the lowest there at 3.1, 3.7, all tie from Melbourne, Brisbane, Adelaide. And then we've got Perth there at 4.3. Again, I don't really go into Canberra, Darwin or Hobart because they're just not capital cities that we're interested in buying in. We focus mainly on capital growth, not just rental yield. I've taken that data and I've updated the numbers based on 100% borrow. If you were somebody taking equity out of your home to buy an investment property, based on the median dwelling value of $918,408 across the combined capitals, receiving an income of 3.5%, you'd be getting about $32,144.28 in income. Then we take away the $59,696.52 that you would have paid in interest on that loan, gives you a negatively geared property of about $27,552.24 per annum, or $529 per week. And as usual, I excluded holding costs like strata, insurance, and maintenance. The newest chart isn't actually out yet, so I'm using the same chart from last month, but I do have an update on the numbers. So I can show you here that currently advertised stock levels are low, tracking about 5.8% below the same time last year and 16.7% below the previous 5-year average. So anybody that, again, is looking and waiting for more stock to come on the market, the government's not coming to save you, they're not making this any easier, it's just not happening. Now let's have a look at our most recent purchases over the past month and a bit. Okay, this is a beautiful home. We got this for our owner-occupiers in the Ku-ring-gai LGA here in Sydney. Beautiful family home on a quiet street. Just so picturesque. I love the facades. Part of a boutique collection of only 4 luxury villas. The home sits on 387 square meters, which is massive. When I say massive, it's because I know people buying house and land packages on 280 square meters. So this is quite significant. It's saturated in natural light. The internals feel spacious and inviting. It's got an open plan in its design, a double height ceiling and a large kitchen area. It's beautifully landscaped, 70 metres to the park, 100 metres to a city bus stop, 400 metres to the local high school and 800 metres to a local shopping village. So this is 13 kilometres north of Sydney CBD. We got it for $2,078,000. Rental estimate, if you were going to rent this, and obviously we're not because this is an owner-occupier, but it would probably be about $1,450 a week or about 3.6% rental yield, which is above the average rental yield in Sydney at 3.1%. Why do we love this? The owner-occupiers really needed assistance with their search for their forever home. The property exceeded their expectations and we were able to secure the property under budget. This was a great yield and growth play. We were able to secure this house and granny flat combo. It requires approximately about $15,000 in a few little cosmetic renovations, just to kind of increase the appeal for renters. But we know the investment will allow our clients to reach their desired outcome. We aren't always able to buy a property that's absolutely set and forget from day one. We can if that's what the client wants, but this client was very much open to doing a bit of a cosmetic upgrade to the property. And again, with our estimates, we think this is pretty reasonable. Now, Capital Growth Corridor, it's an inner west Bayside precinct. It continues to benefit from the West Gate Tunnel completion, which will be in 2026, and strong owner-occupier demand. It's underpinning long-term capital appreciation. There's a granny flat at the back. You can see that in the green. That's where the granny flat is. And one of the renovation items on that list is just a separation fence. So something that's just going to separate this area to make it a little bit more private. This is actually the best way that I was able to look at this. This floor plan helps us visualize the location of the primary residence and the ancillary dwelling at the rear, which consists of a living room, kitchen, separate bedroom. So the granny flat there is in green. That should rent for about $350 a week. And the primary residence, the house should rent for about $550 a week. So again, it's just to show you where they are. The granny flat's in green and the primary residence in red. Again, happy with this. 15 kilometres southwest of Melbourne CBD. We bought it for $980,000, but I added the $15,000 of renovation costs on there. So then I used that number to determine the rental estimate, about $900 per week or 4.7% rental yield on that $980 plus $15,000. So I actually thought that's still a very good return. High rent, low holding costs, value add potential in a growth corridor. You know, what's there not to like, really? This is a great buy. There's certainly still good buying in Perth, though. I've had a lot of people ask me about that. And my superstar, Kira, she was able to grab this newly constructed low maintenance home. It's projected to kind of outperform typical yield benchmarks for the region. Minimal upkeep, strong local demand, should support high tenant retention just because of how young it is and how nice it is. It's located in the Wanneroo LGA. It's about 30 kilometres from Perth. Now, it's on a 375 square metre block. It's a beautiful home featuring a functional 3x2 layout, open plan, living in alfresco area. It's highly sought after in a local rental market. Easy access to Joondalup shopping precinct, Edith Cowan University, and major employment hubs. Brand new home. It was built in 2023. It's offering depreciation benefits, minimal short-term maintenance. The broader area is underpinned by ongoing infrastructure improvements and population growth supported by the City of Wanneroo's planning system. 30 kilometres north of Perth CBD, purchase price $635,000. I mean, it's under market value. It's great. $650 a week to $680. Acquisition delivers a real balance of mixed modern design, immediate rental performance, and future upside, all within a growth corridor under the governance of the City of Wanneroo. It aligns perfectly with the client's brief: young, well located, low maintenance. That's what they wanted. That's what we delivered. So the asset is really positioned to thrive in this rental market right now, where there's hardly anything to rent in Perth. This is the last one I want to show you before we head off. My boy Tyson was able to secure this freestanding townhouse. So it's actually not attached. It's a freestanding townhouse, 3-bed, 2.5 bathroom, 1 car space in a boutique estate of only 4 properties. So this was really nice. It's a modern estate. It was built in 2004, so it's not very old. Low maintenance townhome. It's projected to achieve a strong rental yield supported by high tenant demand in the area and minimal upkeep requirements. Now it's elevated with direct street frontage and private entry, which is lovely. That's the floor plan. It's a practical double-story layout with large bedrooms. I like the floor plan. I like the layout. It makes a lot of sense. 12 kilometres north of Brisbane CBD. The purchase price was $940,000 for this, and we're expecting a rental of $810 to $840. So I kind of looked at the average there, about a 4.5% rental yield. Why do we love this? Well, the acquisition delivers a balanced mix of modern design, immediate rental performance, future upside, all within a growth corridor under the governance of the City of Brisbane, under that LGA. So very happy with that. Remember, we can't help you until you commit, and once you commit, we won't let you fail. And we're bringing 2 things together here when you work with Providence: your desire to build wealth and our 18 years of experience in buying property. And for more than 3 decades, Providence have helped Australians open a life of opportunity through real estate, giving them the future that they want. And we buy boutique quality assets in areas where demand outpaces supply. And we focus on property that appeals to the much larger market of owner-occupiers, which is about 70% of all purchases, and 30% is basically the investment side. So we can buy in the right capital cities at the right time, guided by economic property cycles. And if you've been watching these videos for any amount of time, you'd see that we switch where we're buying based on what the markets are doing, and we usually get it pretty right. So we buy the property which is uniquely suited to your situation, which will act as a springboard to your next property and wealth building stage, whether that's we want to buy our owner-occupier in a few years' time, or I just want more options when it comes to retirement. So this is how top-performing investors build wealth. Thank you for all your time, and I'll see you next month.